We need to wait a few seconds to have this fully confirmed. Recording has started. So welcome everybody. We haven't had our meeting for some time now, but that's because people were traveling and all sorts of things were happening. I would like to have a brief with you before we give our floor to experts on EU ETS. So first of all, I would like to invite anybody who is interested in coming to Manila for Crew Connect. InterManager can provide tickets free of charge for our members. So please, if you've got anybody who is traveling to Manila and you would like to use this opportunity, get in touch with me and I will try to get you a ticket. MSC 106 is starting next week. We will have our representation, and I hope you remember then InterManager has made an effort to do some changes into A1050, and this will be discussed, and we are having interactions with IMO and others next week. Captain Paddy McKnight will be representing. As an industry, we are having discussions with the European Commission regarding EU ETS. And as long as we've got feedback from you, we are able to pass this on to Commission. And interestingly enough, there is an interest. Commission is listening. So it's very important that we do get feedback from our members and we can actually influence. It's all still very, very fluid. I'm working on agenda for AGM now. It looks like it will be Cyprus first week in December. Having said that, I'm waiting for Mark to come back with confirmed dates for me, and I'm working with Colombia team because Colombia will be hosting it yet again. So brace yourself. I will be sending you messages and I will be asking you for agenda. I believe we are firming on this. First week in December it is. And next Monday, I will be in IMO attending enclosed space competition prize giving. Nautical Institute, Imarest, and us, InterManager, have carried out the competition. We've got winners now, and InterManager is sponsoring some prizes for people who won. You will see that probably more next week when we've got a social media and press release on this. So that's all from me as far as the brief is concerned. Anybody would like to say something? Anybody is asking anything, would like to share something? No? Okay, very good. Let me just check chat. I've got, okay, very good. No, nothing here, no questions. Everything is fine. Very good. Now, we've got our presenters today, Andreas and his team. And therefore, Andreas, if you are ready, could you share screen, please?
Yes, of course. Second.
Here we go. Yes, we can see it. Now, can you navigate? I'll tell you whether you can slide or not.
Can you see the screen?
We can see the screen and I can see the first slide.
Perfect. Hi all, I'm Jordan and we're going to go through what we offer, and this is the maritime carbon allowance optimization presentation we're going to start. So, Carbon Squared was formed by a group of entrepreneurs, shipping experts and environmental professionals with a vision to become leading carbon offset brokers in the EU. Carbon Squared is a personalised service for the maritime industry on a mission to help them decarbonise their fleet and tackle the new EU legislations on the carbon emissions. Headquartered in London, Carbon Squared also have offices in Cyprus and Greece. So, the CO2 crisis. The world emits around 43 billion tonnes of CO2 a year. The shipping industry is responsible for around 940 billion tonnes of CO2 annually. This matters to you because the EU are imposing regulations and penalties on shipping companies. So, why do we exist? The European Commission has unveiled its plan to tax emissions from voyages to the European Economic Area. The legislation, well, this will apply to ships that have a gross tonnage of 5,000 and above. The ship has to buy allowances, which are called EUAs, for 100% of its emissions from 2024. The maritime sector is set to be included in the new EU ETS from 2024. Well, the carbon allowance acquisition is set to be is the main service for what we provide to address the needs for the maritime sector. Go on, Andreas, you continue.
So the main services we offer, we have the full carbon squared care package. In association with our partners at Fuel Trust, we can offer scientifically validated carbon baselines that are more accurate than the rough estimates that are currently being used. We also offer bespoke carbon offsetting, so we decarbonize our fleet by addressing the needs of each client separately and formulating strategies to minimize the financial exposure to each fleet. This can be done through EUAs, which are the mandatory ones that will have to be purchased, where you have to comply with the ETS shipping mandate. But we also offer VERs to help shipping clients improve their ESG and achieve their UN Sustainable Development Goals. Now, EUAs and VERs, two very different types of carbon markets. The compliance market is obviously the one that concerns the shipping industry at the moment. It is the one that a lot of shipping companies and ship management companies need helping with. This will be regulated by the EU to cap emissions for shipping. Companies can trade the EUAs they haven't used to companies that need them. And the voluntary credits are just purchased by shipping companies voluntarily, but again, nothing is regulated and there is no compliance to purchase these voluntary credits. These usually come from green energy projects and certified by companies like Vera or the UNFCCC. So how the process works. The number of EUAs that are needed are dependent on the type of ship, the ship tonnage, how energy efficient a ship is, so mostly the type of fuel that they use. This is something that our partners in Fuel Trust can help us with as they accurately can take samples from the fuel, and how much fleet emits on an annual basis. So 1 metric ton of CO2 is 1 EUA. So for however many tons of CO2 a ship emits, that number of EUAs will have to be purchased when the legislation comes into place. We will offer a guaranteed certification process and make sure it all runs smoothly for our clients. Now, EUA compliance. Each ship will be assigned to a specific EU member state that will oversee the compliance. If a company does not surrender the amount of allowances by April 30th of the following year, they will be charged €100 fine per ton of CO2. Non-compliant companies for 2 consecutive years could be denied entry from EU ports. Obviously, it's something that's very fluid at the moment, and nothing is certain in terms of the penalties that will be in place until the legislation is actually passed. Voyages will obviously affect carbon pricing, so whether they're moving from non-EU to EU or whether they're moving between EU countries. Obviously, if they're completely outside the EU, they will not be affected by these regulations. So the Commission's proposals obliges shipping companies to purchase allowances for 50% of emissions when they're traveling between a non-EU and EU port, and 100% of emissions when they're traveling between EU ports. So obviously 100% of yearly emissions will now be accounted for, probably from 2024, and this will obviously result in a massive portion of new demand to the global carbon market. So prices are expected to reach sky high and slowly reach that 100 euro limit. And the main question is, who is responsible for this? Ship owners or ship managers? Ship owners are the main party responsible for complying with the EU ETS mandate. However, ship owners may delegate responsibility to ship managers, depending on the contracts they have and the arrangements they have with their ship managers. The preferred model, which is currently followed in the aviation industry, is that the burden is passed through to the end user. As such, for shipping, the expectation is that there should be a surcharge on the daily charter rate for both spot and long-term charters, and that is proportionate to the carbon that has been emitted to the charter. Now, here we can see the EUA market volatility. But if you notice week by week, it's gotten narrower and the market has become more stable. EUAs closed at 69.10 euros last week, up about 1.5%, and traded across a narrower €3.43 range. So obviously the market is getting more stable, but we are expecting it to move towards the 100 mark as we move closer to. And the future outlook, initially the EUA and the European Union have said that the EUA supply will increase as the EU will bring forward the release of more EUA auctions at the moment. But that means that moving towards 2030, there will be less supply available as they were bringing forward a lot of auctions right now. Thus, prices of EUAs are expected to exceed 100 euros per ton of CO2 after 2030 or even earlier. So, it could be an opportunistic time to pre-purchase EUAs for some clients, as there is no expiry date to when you can actually register and use these EUAs. Our trading department can assist the shipping companies in formulating various strategies centered to cater the needs as defined for every ship owner or manager. We also have hedging strategies in place. Our advisory department will produce hedging strategies to protect your investment and avoid short-term volatility. It's designed to reduce the impact of short-term corrections in asset prices. If we're trying to hedge an equity portfolio against the market sell-off, we would expect the hedge to appreciate in value so that it offsets the drop in equity. Fuel trusts. The current EU MRV emissions model only offers rough estimates. They don't account for chemical interactions, source fuel data, or supply delivery chain impact. By using Fuel Trust's proprietary algorithm, ship owners and ship managers will be saving approximately 5% above estimated emissions that they would have to purchase in allowances. Fuel Trust used cloud-based AI and blockchain technology to offer a validated historic carbon baseline in just weeks and at a lower cost. So our process: meet with our experts in the beginning, then using Fuel Trust, produce a validated carbon baseline that is estimated to be 5% less than what the EU MRV estimates are. 3, formulate bespoke strategies for your individual fleets. 4, pre-purchase the compulsory EU allowances and can use them even at a later date. And for other shipping companies or ship managing companies that are interested, ESG initiatives can be looked at by purchasing BERs, and we would regularly update our clients, consulting and let them know on the latest legislation and what they can do, obviously, to improve and to limit the costs and the financial burden that they're facing. So, presentation. Any questions?
Very good, thank you. I do have some questions, and obviously I'm opening the floor for our members to have as well. So thanks very much for rounding up everything which we probably have already known, who is responsible and so on and so forth. I picked up one thing which puzzles me. You are saying fleets in your presentation. Our problem is then sometimes, pretty often, we are serving ships as a ship managers for different fleets. And now for example, Kuba Szymański Ship Management, I'm serving 72 owners. And I've got 2 ships for this, 7 there, 5 there, 8 there. Are you talking about Kuba Szymański fleet? Or are we talking about 2 fleets for Deck 3 as an owner, or Khalil as an owner? That would be my first question.
Well, in reference to fleets, we understand what you are referring to. However, we are dealing with ship-by-ship basis because every ship is a legal entity by itself. So at the end of the day, and we have gone through legal opinions, we received legal opinions in what we are discussing right now. At the end of the day, is ship-by-ship basis as a legal entity, that calls in European ports. If we have, as Andreas mentioned on the presentation before, a vessel that is trading 9 months out of the year outside the European Union, those 9 months up until 2030 will not be liable to pay for carbon credits to offset its carbon footprint. The moment that it calls in a EU port, the transit voyage that is going to be from outside the EU to the EU will be at a 50% charge. And then from there on, every call that it has within the EU, you will be counted for. The beauty that we have with our partners, Fuel Trust, is that we can provide you all this. You don't need to enter a log yourself. We will have an electronic log for you that will have unique blockchain identities on the fueling, on the bunkering processes that you will be doing. And we will be identifying immediately for you what will be the charges that you will need to have. In comparison with what IMO is suggesting right now, which is a much more, it should be around there, which is usually 5 to 10% much higher. So you will be saving already, the ship owner will be saving already money. Now, moving forward, 2024, we don't know how this will be charged. And by that, I mean the Baltic Index, for example. Are we going to be having a special rates for special prices on the index for operations within the EU? We don't know this. This is something that we need, is the industry that needs to address these issues.
Okay, very good. So you answer my question, then it's not fleets, it's the separate ships, because that's what we know. So I was a bit confused in the presentation when I heard fleets, and I thought that maybe there were some changes and I needed education. Very good, thank you. Now, something which I'm being asked this question and I haven't got an answer, and it would be nice to hear it from you. Let's say it's July next year, 2023. My ship picks up the cargo from US to Poland. The vessel will be in European waters for 14 days. And that's it. Out of 365 days, this ship will be in European waters 14 days only. We've got only one contract with this particular cargo owner. For this 14 days, that's what it is. When are we going to charge for this?
Okay.
At the very beginning in July or January 2024?
You will be charging at the end of the first quarter of 2024 for any business that you did in 24. It's on a quarterly basis, the day after the quarter, April 1st, if you had your vessel operating for 15 days in European waters during the first quarter of 2024. In July 23, you are not liable.
Very good. So I now turn to the owner, cargo owner, to have this money, and they are non-existent anymore. They just disappeared. What happens then?
You mean the charterer?
Yeah, they just bankrupt.
Well, if it went bankrupt, I think you have a much bigger problem than only with the carbon offsetting.
No, because I've already charged him or he paid me for the business we've done in 23. So as far as hiring the ship, we are fine. I've got my money. But then he is still liable for this 15 days.
That's why we're suggesting to you that it should be part of the charter rate. The whole charter market, and that's why I refer to the Baltic Index or whichever other index we are using, or even on the spot markets, we need to adjust our rates as an industry to reflect what will be the cost. Where do we come in is that with us as carbon credit, we can come and provide you hedging strategies that you will know ahead of time what will be the cost for the next year or 18 months or 24 months of your carbon credits that you are going to be using. So you can do your calculations and reflect those on your rates. Where somebody that is not going to move, not going to work with a company like us that we specialize in this industry, you will have to buy on a spot price the carbon credits when you have to redeem them, and you will never know what will be the price, and that will not be able, and then you will not be able to reflect them on your charter rates. And that's where we're going to have the problems with the bankrupt charterer, for example.
Excellent. So following this, what assurances do we have going with you? You have calculated that the EU or the rate would be, let's say, $75. We go, but in 2024, unfortunately, it's not 75, it's 105. And there is a difference between 75 and 105. European Union will still collect from us 105, or will try. Okay, go ahead.
No, as a matter of fact, this is where we need to be more clear. Maybe we didn't communicate it properly. If you are willing to buy carbon credits, EUAs, then your cost will be the value of the EUA. If you are not going to buy carbon credits with us or with anybody, not us only, then you have to pay €100 per EUA, which is a penalty. The second time that it will happen, you will have also cabotage junctions. So you will not be able to call the European ports, and that will escalate as we're moving forward. So by buying the EUAs ahead of time, you will be saving, in the case that you suggested right now, €30 per EUA.
Okay.
Additionally,
so maybe I'm still not understanding that there is an auction idea. And what happens if the auction at the end, when I am supposed to pay for the European collection time, the auction provides AUEs for €25, and I purchase them for 75 from you. How can I then go to the charter and say, sorry guys, we made a decision 75, and he says, but I can buy it for 25. Why should I pay 50 more?
This is where the market, we know right now, we need to use macroeconomic basic principles in this. We know that as supply and demand moves, we know where the prices are moving. This is where we are setting up a strategy. For a fact, we know that we are not going to be having a crash in the industry where we're going to be reaching prices below €60. You can see that, and you can see the trading ranges, how they're getting smaller and smaller. And we can provide you this research. Now, if you have an owner, at the end of the day, it's not so much the charterer. The charterer, you will come and tell him, this is the price that you're going to be paying on the surcharge for the carbon credit offset while trading within the European Union. It's just going to be a fixed thing. He's not going to come and check what the price is in 6 months, 9 months down the road. And even if he comes, he makes an agreement with you about what the offset price is. That's a fix, that's a given. You will be buying the EUAs, and you can deposit them on a clearing account, and you can use them, exercise them whenever you want to. You can actually even trade them. Let's assume that you bought the EUAs at €60, and you see that currently the price is at €90. You don't need to exercise them, but you can sell them to another ship owner or actually to another user altogether. So it can be even an opportunistic strategy.
No, very good point as well indeed. Thank you. I think that clarifies my questions. Obviously, I am not dealing with it daily, and I'm hoping that our members who have actually dive into it would have some questions. So I'm opening the floor, waiting for anything. My problem here today is that this is being recorded, so no doubt the presentation will be shared today with members of our teams who are not available. and there might be some questions, because that's usually how it works. Then people are then watching it in the quietness of the offices, then have a debate, and then they come back. I tell you what would be really good, if you could populate your last slide, or any slide where you've got your details, and leave them for a second, because this is being recorded now, so people could actually get your details, and if they have any questions or any comments, suggestions, they will be able to directly come to you. Obviously, I'm more than happy to be a man in between, but to save time and effort, it would be good if you guys could have it. Any questions from our team here? Members, please. Anything which strikes you, any comments, any suggestions? Absolute quietness here.
Maybe it is quietness because to some extent we are all still confused, really. Yeah, so what will happen if you change charter in between? So you arrive on a charter to a European port, then that's it, that charter finish, and the ship is not chartered until you reach to another port. So in between you are off charter for 4 or 5 days, where you are going out of European port. So who pays this leg of the journey?
The ship owner will be paying the ballast trip back to wherever you're going to be going, and it's going to be at 50% of the value of the offset value. Let me also explain a little bit what are the averages currently, emissions, carbon credits that the vessel has. I don't know if you are familiar with that, with this. The averages right now for, let's assume, a Handymax vessel that is 10 years old, is around, if it was supposed to be trading 100% within the European Union, it will have approximately around 9,000 carbon credits it will require to have offset its carbon footprint. That's, of course, the one side. The other side is where we get into it, where we can assist you of how you can reduce that exposure, of course. But I just want to put some numeric understanding of what does that mean, and start understanding what it means when you multiply that by 50 vessels. It's becoming an expensive game, which we have to address sooner rather than later, because the later we address it, the prices are going to be moving higher.
Yes, our members have actually done this exercise, and we have very well, not all of them, but majority of them were struck by the figures they calculated. Hence our search for insurance companies who would be able to help us. Should we find ourselves in a situation Khalil just explained, then the vessel is not 5 days. We were hoping it will be 5 days. No, we were even hoping it will be backloading. But then all of a sudden the charterer pulls out and we are left with not 5 days, but 50 days. And we have to go somewhere. So will that require ships to leave Europe as soon as possible and go outside and wait somewhere, drifting? That will be completely new geopolitics, and so on and so forth. So very interesting new dynamics, which we are all trying to get grips with. And it's very good to have you guys today telling us, because you are another opportunity for us. Obviously, bigger players here in InterManager are already thinking of great opportunities which this new regulation provides. But some of us are at the moment in panic stations because we don't understand where we're going. And even listening to you today, you are also saying that we don't know what will be happening in 2024. And it's difficult to actually build a business case when we don't know. But here we go. That's what it is today. And I think a lot of our members are also becoming less sure, less certain about things, because nobody predicted war. Nobody predicted all sorts of repercussions it brings with it. And when we were talking about something, very, very solidly 2 years ago. All of a sudden today, we are far less certain about things. So we need to, I think the name of the game is flexibility and covering all sorts of angles to make sure that we are actually covered. Okay, not seeing any more questions. I'm posing for a second. I would like to say thank you very much, gentlemen. It's great. No doubt there'll be more questions because people need to digest what they just heard. They need to compare and verify what they heard from you as well. It's great to have this opportunity actually to see what you mean and how you think about things, and then you are available. That's great. Thank you. Any last word from you, gentlemen?
Yes, we would like to thank you for the opportunity given to us, and also let you know that as your members will see this video, what we can do is, if they come up with any questions that they are addressed to you, if you can forward it over to us, we can reply back and provide you some further detail. Additionally, we can share with you, we have a weekly general EUA strategy report that we are generating. We started generating through our research team. So we can share it with you and you can share it with your members thereafter.
I would love that, actually. Thank you. Definitely, that would be a benefit to our members. So if we could make this agreement, and I would be watching out, we do send regular messages to our members, and it would be, well, we'll see, we will test the waters, we will see how much interest do we have. And my experience tells me that the best businesses are usually made on the back of trust developed. So since you guys are new to us, we are new to you, I believe the first thing is to build a relationship and trust. And if you are willing to provide that kind of service, let our members sniff around you, judge you by what you do, so you will walk your talk. And if it is a good walk, then I'm fairly sure people will be happy to engage. So thank you, really appreciate that.
Thank you. Thank you. Bye-bye.
Thank you. And dear members, I've got nothing else to say. If there is any pressing issue you would like me to take care, please provide me with homework. I'll definitely get on with it. Meantime, I will be working now on AGM and all those things which I told you at the very beginning. We've got a full calendar actually, and I start traveling. I'm traveling already, but I will be in Singapore, AJ. I'm coming to Singapore, so watch out. I'll tell you precisely when. And then I'm in Manila as well. And then Derek, watch out, I'm in Cyprus probably at the very beginning of the month, December.
Thank you, Fuba. Good to hear that. Happy Deepavali to you as well and everyone. Thank you.
Thank you, everyone. Then I'm switching the recording off and thanking you very much for attendance today. Watch out when we've got the next meeting, hopefully in 2 weeks' time. All the best. Bye-bye.
Thank you.
Bye-bye.
Oh, by the way,
Bye-bye.
Bye-bye.
if anybody's coming to Manila and needs assistance, you let me know. Okay.
Thank you, Karen.
We'll be here
Thank
to
you.
help. Okay. Bye.
Bye.